I've got a very simple tip to tell you today about one of my favorite things, swing trading. Hang with me a few minutes. Hi, this is Tim from TradingStrategyGuides.com. Today I'm going to tell you a simple tip to help you improve your swing trading. And I've also got a great new setup on the cryptocurrency Ethereum. Here's a spoiler alert. It looks like it's going down, and it's already started today too. I'll do all that stuff in just a few minutes, but first, updates on the open trades, and after all that, the trading maxim for today. Take a sip of that coffee and tap your toes for a few minutes. And don't forget to hit the subscribe button and hit the bell so you don't miss any of these great tips. Okay, it's chart time. The S&P 500 hit my trailing stop right here at 3103 for a great profit of 66.75 on the second half. Done with the ES1 for right now. American Micro Devices dropped precipitously yesterday and hit our stop at 40 for a nice second half profit of $5.11. Done with this one for a bit. The Dow also dropped and hit our stop at 27,750 for a profit of $3.70 on the second half here. And I'm done with YM1 for a little bit. As anticipated, crude closed back in the pattern right here. And I closed it Wednesday for a $1.66 loss at 57.01. I'll watch this for a few days to see if it's salvageable. I'll let you know what I do. The Aussie Swissy is going sideways a bit. This could possibly be construed as a bear flag, which I would hope would break out to the downside, and still waiting for this to hit the first target. Our Swiss franc Japanese yen setup from last Friday triggered on good volume right here, and I'm in it right here at 109.37-ish with a target of 108.90-ish. Looks like we're about halfway there. Stop loss is 110.09. And last but not least, the US dollar Japanese yen setup from early October finally triggered right here, and I sold it at 108.41-ish with a target of 107.88 and a stop loss of 109.188. Looks like we're getting a little bit of a consolidation in here, so we'll see how this goes. If it starts to break to the upside, I'll probably shut this thing down. Okay, let's talk about swing trading for just a few minutes. Just to be sure everyone is up to speed, swing trading is simply trading where you hold your position for more than a single trading session, typically several days or several weeks. If you've followed my videos for any time, then you've witnessed swing trading because that's what I do. Why? Because I don't want to stare at 5-minute charts waiting for something to happen. Yes, I spend a lot of time poring over charts every single day, but I don't have to worry about missing something when I want to get up and make a fresh pot of coffee, for instance. The only time I have to be truly attentive to the charts is right before candle close time, but I can know way in advance which charts are about to trigger. Now, I told you that I had a great tip for you on swing trading. You probably already know that I find my trades using pure technical analysis. Remember, we win by winning, but we also win by not losing. So here's the important tip. Don't ignore scheduled news events that affect your trade. I had to relearn that lesson this very week. I got hit Tuesday on the Kohl's Corporation trade. It had hit our first target. I got half off for profit, and the second half was locked in at about the same profit that we had on the first half. Then the news came out, and Kohl's gapped down, and I ended up losing quite a bit on the second half. I had closed about a 0.67% account gain on the first half, then ended up with a loss of about minus 1.8% on the overall trade after the hit on the second half. So the practical part of the tip is this. close profitable positions the day before a related news event happens. Let me know in the comments below what you think about swing trading. Have you tried it? If yes, where have you tried it? If no, where would you like to try it? Okay, let's look at the Ethereum setup now. The cryptocurrency Ethereum against the US dollar has formed a great descending triangle. And look what it's doing today. To bring everyone up to speed, a descending triangle consists first of a strong support level like this one right here at 155 with real hard rejection wicks. You can see here, here, and up in here. Then we expect a series of lower highs in the form of this downtrend right here. And I like to get confirmation with the decline in the volume and the volatility like so. And of course the volatility is measured with the average true range, or ATR, which is simply the average of the length of the last 14 candles. It's called a descending triangle because we expect it to break to the downside, and that's the only direction I will take a trade on this. So here's the trade plan. We will sell a daily candle close below the descending triangle. On the breaking candle, we want the volume bar here to reach to the volume average. If it doesn't quite reach the average, but does reach at least 75% of the volume average, then we'll take a half-size position to reduce risk. You can calculate that number by dividing the volume by the volume average, and you should get 0.75. If you don't get at least that, then you want to stand aside on this trade. The stop loss is 1.5 times the ATR, and the target is 1 times the ATR. So what that means is on your breaking candle, you'll look over here at the ATR, and then what you'll do is, let's say this candle were to close right here today. That would be your entry point. You would measure 1.5 times the ATR up here, and that would be your stop loss, and then 1 times the ATR down here, and that would be your first target. If after entering the trade you get a close back up here in the pattern again, we'll take the loss right then and not wait for it to hit the stop loss, because we intend for these breakouts to be explosive and hit the target quickly. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow the stops as price moves in our direction until the market takes us out. And as I've mentioned before, if you have trouble following stops, you can always use the PSAR, like I mentioned in Wednesday's video, and I'll put a link to that below. These two rules right here are the very definition of cutting your losses and letting your winners run. Now typically I do this with 2 positions. The first position has a hard stop loss and a hard take profit associated with it, and then the second position has just the stop loss and no take profit. The first position will close automatically when the first target is hit, and then you'll manually have to move your stop loss up to break even on the second position, and the second position will then be allowed to run. I will only risk about 2% of my account on each trade. As I've mentioned, watch this today. This could trigger, but in any case, be sure to keep an eye on it over the weekend since the crypto market doesn't close on Fridays. And that's today's setup on Ethereum. Remember, I'm not trying to tell you what to do here. I just want to tell you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. And if you've developed a trade management plan that works better for you, by all means use it. Trading is a very personal thing, and things that work for me may not work for you. You have to understand your own mind to find the best strategies for your own trading. And psychology is, in my opinion, the most important part of trading, and the trading maxims that I share with you every video are my way of helping to handle my personal psychology. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. And feel free to borrow from my list, of course. Today, we're going to go all the way back to the very beginning. Tim's trading maxim number 1. Would you rather be in a trade wishing you were out or out of a trade wishing you were in? If you've been a trader for more than a few minutes, I'm pretty sure this doesn't require much explanation. I've often been in a situation where I would rather be out of a trade. Just say this to yourself before you click the Do It button. It'll give you a second of pause to be sure you're doing the right thing. And don't forget our Ethereum trade plan here. We're going to sell a daily candle close below the descending triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And just to be sure that you don't miss any of my trading picks, sign up for my free trading picks email list. I'll be sending out 3 or 4 trading picks a week, from stocks to futures to cryptos to Forex, and you'll see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or 2 in each one, and maybe some extra Q&A or training. And don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And please don't forget to tell me in the comments what you think about swing trading and what you're going to try it on, or what you have tried it on. Please tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next week.